What up, everybody? Welcome to another class full of gems here at SMC. So I'm recording this after Jerome Powell hinted at interest rate cuts, and the market went ballistic in our most recent trading day, which was Friday. I'm recording this on a Sunday, as always. Every Sunday at 6:30 Eastern. Join these classes live now. Oh, for free, of course. Pull up now. Now. This is actually Thursday's price action prior to that massive day on Friday. But to give you a little background, the market was pretty bearish heading into this day, right? Like we've been dropping for a little while. You could see, I told you guys about the drop pretty much earlier than anybody I've seen personally on social media because I was bearish on that drop. Um, all in this vicinity. This vicinity. Yeah, actually, yeah, my fault. It's come back to my memory. Yeah, it was all in this area where I was like, yeah, the market is gonna make a move down and we could target this purple area first. First target is this. So that's why I say minor target. And it is a fair value gap from the daily chart. Now, the reason I call it a target is because it's not anything, like I actually explicitly said, it's not anything I'm expecting to bounce out of. It's just something that if you want to take quick profits, you could take quick profits right there, or at least trim. Let's say you got in some swing trades, you could trim some of your contracts here and leave runners for whatever is the remainder of the move. And then we seen another target, and we had another target lower that if it wasn't this, it was this. But either one of these, I would have to zoom out to a higher time frame. But my point is, we had lower targets that price actually did not end up getting to. So we're going to talk about how to recognize a reversal early. But before that, I just want to give you guys context. This is after the market has been pretty bearish for quite some time, just dropping consistently. A lot of people have made money on these drops. I know we were making money at BTSMC on these drops as these were all called out and targets was being hit left and right. Cool. Now, here we are, coming into this day. After massive drops, you could see even the previous day, Wednesday at 9:30, first candle on Wednesday 9:30, immediate drop, massive drop. Man, price was just dumping. Great. Easy to see, nothing really to talk about. We were bearish, price kept dropping. The only thing I could point out maybe is the engineered liquidity into the drop. I always talk to you guys about these staggered moves. We tend to take those areas in a straight line. We tend to take them in a straight line. So you already, no one should have been shocked about Wednesday taking this area out. And we use this daily BISI as an inversion for my people who are familiar with inversions. That was nice as well. Copy now. A target gets hit and we start to retrace. We start to retrace. All right, so we start to retrace. Boom. Stagger move up, stagger move up. But then price eventually just goes sideways. And then it starts to drop in a staggered manner as well. So now you guys got all the background context of how we got into Thursday's New York session right here that we about to talk about in detail. So heading into New York, with everything I just said, one thing I hate is when I look at price and I can see that we choppy on both sides of the market. So our uptrend is staggered, our downtrend is also staggered. No bueno. That tells me we're in bad conditions. We're being bad conditions because you see, let me go to the hourly for a second. You see, even this hourly, um, it's very cool for price to come into the upper half of this bearish hourly fair value gap and reject. That's cool. But once we come into this area and we consolidate, I wanted us to start breaking down and breaking down fast. Like I don't want us to basically break down like this in a zigzag manner. Like I'm cool with you zigzagging up into our point of interest, right? The upper half of this bearish for value gap, which is just me calling out a premium retracement. That's all. And I'm gonna explain premium in a little bit for the beginners in the room. But coming out of premium, you don't want to stagger out of premium. It's not really the best sign for real. A lot of times when you see price stagger into a premium, you will want to see price aggressively leave that area, not stagger out of premium either. So let's explain premium in the first place. Premium is you looking at an impulsive price leg and you're measuring the price leg and you want to see price. If it's a bearish price leg, right, you're going to go from top to bottom and you want to see price retrace into the upper 50% of that bearish price leg. All right, now there are more favorable spots in that top 50% that you might want to see rejections on, but in general, you could just look for like if there's a fair value gap in that upper 50%, those fair value gaps have some probability if the market is indeed still bearish, of course. Because as I was saying to my people in the masterclass yesterday, bearish fair value gaps work when we're bearish. Let's keep things simple, and bullish fair value gaps work when we're bullish. Bullish patterns work when we're bullish. Bearish patterns work when we're bearish. And I don't trade patterns, but I'm just, talking to the different types of traders in the room. So, just keeping trading simple like that. So anyways, I hate when we come into those areas and we stagger out of it. It's a bad sign for me. I know that we might end up in chop, or I might be witnessing the beginning of a potential reversal. So that's the first suspect thing that I looked at last week, seeing us trade into this point of interest and then not reject aggressively. Also, what else was I going to say about that? I mentioned that this is premium. We talked about that. Yeah, I mean, I guess that's it. All right, so moving on. We now come into Thursday, New York session. You can see the 5 minute is extremely choppy. This is not the best way to start price action, right? It was a very nasty move. I actually traded this live. As you guys know, I trade live multiple days a week with the team, with the premium members. And on this day, I actually took 4 small scalp losses inside of the chop. Yep, inside of the chop. This price had no real direction. It goes down, it goes up, it goes down, it goes up. You can see the nature of price action. By the time price started moving, I already was like, yeah, I'm done. Now at least I'm done taking trades on live. Like I took 4 very small loss. Any loss I take is generally small because I know when I'm wrong early. And a question in the chat just said, so should we stay out of those conditions? Absolutely. I don't like trading those conditions. It is not that I can't get a bag in it on different days. What I'm looking at is just what's the most consistent approach to take as a trader. I feel like if I'm a make decisions for my level of participation in the market, right? Am I gonna participate in sideways conditions or conditions that have an actual direction? It's just a simple decision to me. It's like, well, I would rather participate in directional conditions. And so that's exactly what I'm gonna do. That's the best thing. That's the best decision for my account. It's like if you were gonna plan a party, right? Would you plan a party when the weather is clearly gonna be sunny? Or would you plan a party where it says there's a 50% chance of rain? You know what I mean? Like, you listen, it might not rain. It said 50%, but the fact that it said 50% chance of rain, you probably gonna hold off and choose the next day. And that's how I feel. It's like I'm not saying it's definitely gonna rain, meaning I'm definitely gonna have a red day every time it chop. No, I probably might have a green day because there's a 50% chance of me losing money in chop. I just rather stay out of chop. I don't like trading it. Sometimes because I gotta trade live, I try to show up for the members and I might try to get a little scalp in there. But that's why I say all them losses will be small regardless if I did even take losses inside of the chop. But like, especially when I'm by myself, I pretty much just stay out of price action that look like this. Like I don't want it. I'll wait till price leaves the range in either direction and I'll trade it based on that. And like Michael said, fighting chop is definitely mentally exhausting even when you win for a fact. And then just in general, a lot of like I'm a trend specialist, like certified trend specialist. And when it comes to trend, I understand every element of what trend looks like in the upside direction as well as the downside direction. And so all of my strategies and stuff are things that should be applied to trending price action. The things I do are not applied to choppy price action. That's just not me. Might be you as a trader. We're different people. So I could just speak to what I do. That's what I teach. Is what I do. And so I just stay out of it because I know my stuff is not the most consistent inside of the chop. Outside of the chop, let's make money. So here we are. So I did try to trade inside the chop when I was on live with the team. We took, had a small red day there with the team. Now, as we're leaving alive, I'm like, well, everybody, I really think Wednesday's highs, which is that 368.75, right? I was like, this looks good. Like I think price is gonna run here. And so we pretty much get off live like at some point during the consolidation. And shortly after live, like price starts moving in that direction. I'm like, all right. I mean, well, things look good. I'm like, all right. I'm watching it though. For me, I was gonna stay cash. I'm like, bro, I ain't trying to trade this today. Like, we moving real slow. I don't like trading slow, staggered price action. A good way to tell that price is staggering is when there's a lack of fair value gaps. Understand this about fair value gaps to my new people. Fair value gaps are your best volume indicator. They show real true volume in the market. They show the times in the market where we're on a aggressive mission. So, for example, there's a fair value gap right here, which shows you there was a fast movement in that area. That's why there's a fair value gap there. When there's no fair value gaps, just like this whole entire section, it shows you that every time we move up, we retrace. Every time we move up, we retrace. Every time we move up, we retrace. And this type of movement right here is exhausting, of course. And it's also just typically low probability. And as I showed you earlier, after a while, a lot of times we end up swiping out that whole area anyways. So eventually we end up reversing on that type of price action regardless. So I try not to participate when it looked like that. So as I'm watching, I know we had a little energy at first, but I'm watching a stagger. I'm like, oh, this is trash. I'm like, we probably very likely will move into this yellow line, but I don't want to participate in it. Now, I watch this happen. Hold on. It's coming. All right. So I'm looking at this. I'm like, okay, that's a nice green candle, low key. Then I see this. I'm like, okay, got a nice little fair value gap. Maybe they about to move to Wednesday's highs very aggressively because we got our first fair value gap in a very long time. So I'm like, yo, that's good. That's good. It's very likely that price is going to use that fair value gap to go higher. And this is where the way that I approach the market is extremely helpful. And I'm talking to you about it because I want you guys to adopt that. So let me explain. Um, what I do is based on if-then statements. So of course you need probably more knowledge on how to build the best if-then statements in the market, but at least hear me out as you continue to grow in your journey. If you know the most probable areas for price to use, if we're going to remain in a certain direction, you can build entire trade ideas off of that. So to me, one thing I understand is if we're going to run the Wednesday's highs right here, this is the if then excuse me, this is the if then statement. You know what I mean? Like if we're gonna go to Wednesday's highs, it has to be this. Like if Wednesday's highs, then this. That's it. If Wednesday's highs, my fault, my fault. I said that backwards. If this fair value gap, then Wednesday's highs. If this fair value gap, then Wednesday's highs. That's the if then statement. And so what's the opposite of that, my people? What's the opposite of that? If not this fair value gap, then what? So what I targeted, or let me just, my bad. Dang, I kind of revealed it. Yeah, okay, so whatever. I was gonna ask it in the form of a question, but it's cool. So yeah, price doesn't use it. Okay, so let me tell you guys what I targeted. So what I ended up targeting was I just looked for this fair value gap here on the 5 minute, understanding that price has to make this retracement into here before anything else. All right. So at the time, as I'm looking at this, I'm like, okay, I know if we don't use this area, okay, it's gonna make a move worth let's see, it's between 50 to 60 points from the invalidation of this fair value gap. And so I know not everybody in here trades futures, and you don't need to trade futures to apply what I'm saying. I always have to get that disclaimer because I got new people every week. I don't teach futures, I teach price action that applies to every single market. So if you're an options trader, use this knowledge on your options chart. So anyways, just for my people who do trade futures, you guys may understand like a 60-point move on the NASDAQ is a lot of money. You feel what I'm saying? So I think the risk to reward is there because you see, as we lose this area, we're simultaneously going to be making bearish PD arrays. Okay, a bearish PD array is basically bearish things that we may reject on. And so an example of that is a bearish fair value, guys. So let's go to like the 30-second maybe and see what we're creating on the way down. So even right now, technically there's a bearish fair value gap right here that just formed. You see what I'm saying? That's what happens as we move in the opposite direction. So we actually have one up top. I'm gonna say right now, if we came back to this one up top, I know we're gonna run to the yellow line. So even in this moment, like if we came to this fair value gap, that's a horrible sign for a bearish person. It's very likely we will probably move to the yellow. you know. All right, so we trade past the area, of course. Uh, and at this point, if you were to get involved, like let's say you were to get involved in a trade, you don't really want to see price come back to this fair value gap right here. I know there's a small one. And so this is where you start getting choosy on like, okay, which fair value gaps do I want to see respected as we drop? Right. I really wouldn't want to see price come back here. And yet I am on the 15-second time frame. And that's because I'm looking at how price is treating um this 1 minute buildup of liquidity. So time frames I like to pair up be the 1 minute and the 15-second. All right, so for this play, as I took this play, by the way, because once again the risk reward was so lavish, you know, I didn't end up red that day. You know, this play that I took was an $1,800 play altogether, which had me finish in the positive that day, and because the risk reward was lavish altogether, and so in general, areas that I'll be watching on the way down is like, okay, if we're bearish, then I understand. This is a fair value I will be watching personally. I would, if we invalidated this, I would probably start to scale out a bit. If we came back to this up top, I'd probably exit the position. It's not a good sign. You know what I mean? So altogether, if you look at the size of this is a 6-point stop. You know what I mean? That's a 6-point stop if we're gonna use that. So now price doesn't is at least it's not using it so far. Price doesn't even use that area. So at this point, I'm like, okay, now I don't want to see price come back above these highs. All right. And it has to do with me not wanting to see price retrace. Like, there's a couple of reasons. One, I'm not gonna get into detail on out of respect for my mentees, but one I'll like say here, we don't want to see price retrace back into the same range that we just came from on this certain pursuit of liquidity. So I guess what I'm getting at here for you is that it depends on what the market's objective is, on what type of retracements you'll expect. So sometimes you expect and are okay with a deeper retracement. Other times you're expecting very minor pullbacks. And if you see a deeper retracement, that's your first signal at a reversal. So I know a lot of you market structure people in here are probably saying, well, Rel, I noticed we had a lower low put in. That's a change of character to the downside. And so you might see a lower high come in before a lower low. And I understand that's how many people teach, but you got to understand it's all about having a deeper understanding on trend. If we're truly trending for this specific type of scenario, you actually don't want to see price come up too high. Like I said, coming back to this fair value is not a good sign. Definitely don't come back up here. That's even worse. And so things of that nature. So for me, I'm looking at these highs as like very important highs to me. I want to see those respected on the way down. So that's how I tend to move my stops. So I know when I first got into the trade, if you guys recall, my first stop was me wanting to see this fair value gap respected. Let me actually highlight it, my bad. I wanted to see that fair value gap respected, right? When I first got in. But as the price moves in my direction, I move my stop down. But understand, I'm not moving my stop down based on a fear of losing money. We're not moving stops based on any of that. We're moving stops based on what areas do I want to see respected in pursuit of my target. And so as we continue to drop to the target, you also continue to like drop your stops. So for me now, as we move, I don't want to see price invalidate these highs right here. Ideally, I need to see us just continue to drop. So for me, I would start to trim or potentially even exit the whole position if we run that yellow line. And once again, I'm watching this on the 15-second because to me, this is a 1-minute play, but with a 5-minute destination. You know? And so stops is dropping, and then same thing. Now I don't want price invalidating this green candle. So I'm holding it as long as this green candle is being respected. So first of all, I'm securing some type of profit, or I'm mitigating my risk. At least I know I won't take a loss on this trade, but I'm also giving my trade room to breathe, because you see you can't trail it too closely, because for example, there's a chance that price could come into this fair value gap right here and still reject. So you can't just every time you see a green candle, oh, let me get out my puts, let me get out my sells. Like chill, because price is coming up for a reason. There's a chance price might come up and reject this and come down. Now you stopped yourself out for no reason. So you got to give yourself room to breathe. But the room to breathe is not based on money. The room to breathe is based on um, basically an understanding of areas that should be respected if you are correct. If you are correct on where price is going. So, once we get here to well, we didn't touch the destination yet, so I was still holding. But let's see, hold on. All right, now once we get to the destination, I took profit. Now, why did I take profit versus looking if it could continue to reject even harder? Right. And like I said, guys, this is like a 50 something, 60 point play or whatever. Why did I take so on futures that's good breads? This is a good exit, good money made, whatever. Why am I taking profit here at this, to be honest, pretty irrelevant fair value gap? Like, I don't really like this fair value gap for real. It's not because I'm expecting price to like reverse on it and go to the highs. I'm actually not necessarily expecting that. To me, the reason why I take profit here is because I anticipated further chop that day. The reason I anticipated further chop that day is from me understanding the 5 minute now. So what I understand is, as I told y'all, when we have this type of staggered movement, what do I say? We tend to run it in a straight line. Anytime I'm noticing something that is not typical of trend, I become very suspect on price action. So I know that we were, and I'm suspect of chop, by the way. I know that we were making an up move, but the fact that we did not hold that 1 minute fair value gap that we needed to, if you guys remember, I'll go back to it just so you could take a look at it. The fact that we did not hold this fair value gap told me that we're not about to make it to the yellow line. That's what we built our if then statement on. So that told me that the 5 minute is now going to have a deeper retracement to fake a lot of people out who were playing into Wednesday's highs. Just like I was. Look, I told you, I really thought he was going to go to Wednesday's highs at that moment. But also, this is why you see I don't like to trade on the inside of like sideways movement, because what's typical doesn't happen all the time. It starts to feel like gambling, and I'm not into that. I always do things with strictly logic in these markets. So my point is, since I'm noticing that we're not going to Wednesday's highs because we did not use this, I'm not exactly expecting us to make a massive move to like the swing low either. I'm not expecting that, because I already peeped what we doing. We've been going in this sideways range overall since overnight. So that's why I'm just taking easy objectives. I'm like, you know what? When we get to this fair value gap, I'm gonna take profit and I'm gonna be done for the day. And so that's what guided my decision there. I think it's best to take safe targets when you know that you're in unsafe price action. And so that's what guided that decision right there. And then, this is what ended up happening. Essentially, price pretty much just use it at first. We was going up, cool, but we chopping, as y'all can tell. You know what I mean? And I'm not in this type of price action. You can see the nature of it. A lot of people probably got messed up in this little section right here alone. Because even if you went long here, they came back and probably stopped you out break even, maybe even took a loss. I think they plummeted through the lows too. If I'm not mistaken, let me see. Yeah, they went through the lows. So even if you went long on that fair value gap, you probably eventually got stopped out, or you went break even or something like that. So it never made it to yellow. And my point is, if we were going to go to yellow, I told you, it would have been this. It would have been that fair value gap if we were going to yellow. So knowing what to build your if then statements on is so important. And another quick thing, something I told my mentees before, but I don't, I talk about this one for free. I don't care about that. We try to, these are throwaway gems. All of anything I say in a free class. Anyway, so, in when we reach destinations, that's when you tend to see those premium retracements. So you see, we reached a destination right there, the one that I targeted. And so now an area that I once said I don't want price coming back to becomes an area that price could potentially eventually reject on as a premium fair value gap. But let me reword that, because I feel like I didn't say that exactly as clear as I wanted to. So what I'm trying to say is this: On the way down, right? On the way down, I didn't want price coming back to this area. If you guys recall, I was like, we need to go straight to this purple. And that's for me understanding trend and understanding that we don't want deeper retracements in this moment. That's a bad sign. We need just pretty much straight movement into this area. Now that we reach this destination, because this is an important destination that could cause turbulence, now price could come back to this area and use this as a premium rejection. You know what I mean? So something that is supposed to be something I don't want traded back to at first, eventually I do want to trade it back to once we reach a destination. And that's all I'm getting at. So, whenever we came here, you could do the same thing I did before. You could grab your fib, you could take it from the high to the low, and you could say, hey, is this fair value up in the upper 50%? Yep, okay, bet. Well, that's the area that I don't mind targeting and looking for shorts out of it if we could go in there. And are you, as prices moving up, are you someone who's becoming bullish? I don't know if it's best to become bullish in this moment because I already told you we probably would have ran Wednesday's highs initially if Wednesday's highs was the objective today, right? Why would they basically make this retracement just to go to Wednesday's highs? But I will say it's a bit speculative though at that moment because to me, bearish delivery and bullish delivery is all trash in this general vicinity. And so that's why for me, I targeted that area and I got out the market. I ain't taking another trade for the rest of the day because I'm like, I just simply don't want to participate in price action that is moving in this manner. So that was my decision. That's why I left. I wasn't even looking for Wednesday. I wasn't looking for the lows either. I wasn't looking for anything. I took what I can. And so, your willingness to participate in the market really should be dependent on your expectation of trending price delivery. And so that's Thursday for you. But yeah, I think we pretty much stayed in this range, if I'm not mistaken, really headed into Friday. Yeah, as y'all can see, like Thursday, this is still Thursday. These candles are all still Thursday. So, we start moving lower and all of that, move back higher in the afternoon. Look at the PM session making a retracement. And then let's start to head towards to Friday. So this is the trading day, by the way. This is overall what Thursday was. This is the 15-minute. We didn't really go anywhere the whole day. If you really look at it, didn't really do anything at all. We stayed right in here. And this is also what I mean by coming out of the premium. Remember, there was an hourly bearish fair value up. I'll show you. Right? What did I say is the expectation coming out of that premium on the hourly? I'm expecting quick movements to the down. When I see price staggering in both directions, I just know like, yo, anything can happen right now. We could get that reversal, or price could just be very annoying to the downside, which sometimes leads into sweeps. That's another topic for another day. So anyways, yeah. So now okay, we're subject to a reversal. So now I'm interested to see what happens between Thursday into Friday now. So let's head to this hourly now. We on the hourly. This is Friday at midnight. Let's see what it do overnight. Okay, we starting to make a move to the downside overnight. And then you can see what happens here in the London session. So Asia was pretty bearish. The London session now is actually looking pretty bullish. So let's kind of analyze that a little bit. All right, so let's take this down here. Let's go like this. And let's go to the 1 minute right quick. Now that we on, what is this? Friday London session. Matter of fact, I know, like, not even on some hindsight stuff. I know y'all know what happens already, but I could say this. This is a bad fair value gap right now. This is a bad bearish fair value gap. So if this was a chart debate, right? If this was a chart debate and I gave this to my mentees and I said, is this a realistic expectation? A lot of my mentees would probably say no. You know what I mean? Because that's not a good fair value gap to talk in this specific scenario, just to build out like the nuance to these concepts. And this is why you can't take fair value gap knowledge from just anybody. In this specific context, that's a bad retracement. in a specific context, we need to run yellow right now. So the first bad sign and what signaled the reversal that heads into Friday is the fact that price did not run these previous lows. These were the lows from, Wednesday morning. Yeah, bad sign, man. Heading right up to this without running a yellow is just bad. It's just bad. And even this retracement on the 5 minute is also telling as well. Mentees, y'all might know what I'm getting at just based on how we moving, but whatever. All right, so on the 1 minute, what I can say is here's where, and I was not awake at this time, right? This is Friday, 2:50 a.m. So this is something I'm saying in hindsight, but based on things that I do just teach on all my people. And I'm also kind of showing y'all here today. So what you call it? Yeah, at this point, I think there's a very fair trade for you to try right here. This is a nice trade in my opinion. The risk reward is there. So what's the trade I did? This fair value gap right here is a bad fair value gap. This one we already discussed is a bad fair value gap. The most important fair value gap for downside was actually this one that we just passed. So I'm gonna erase those and show you again. Let's do it in order. So here's the if-then statement for this trade, which is me showing you guys the whole if-then statement approach to the market. With an understanding of trend, you have to know which fair value gap means, which fair value gap is the most important for sentiment. For bearishness in this specific context, when you have a sell side target so close right here, and some other reasons that are too much to get into right now, this is the most important area. So if not this, then it's very likely that we're going to make a move much higher in the market. So I don't necessarily need to wait for like a market structure shift to know we're bullish. I know we're bullish simply off the fact of if we don't use this area. Now, at the moment, I would definitely be interested in this rejection. Like if I was trading in London at this time, I would look. Let's actually take this trade how I might have taken it. All right, this is a 1 minute fair value gap, right? So typically, I like to see the 15-second turnover. So this is how I would trade this. This is me thinking bearishly at the moment. I'm a bearish person at the moment. I'm expecting rejections. I'd probably say something like, I know we're gonna make it to yellow at the bottom if price could invalidate this fair value gap right here, this bullish one. So this is what I mean by confirmation through invalidation. Some of you guys have heard me say that phrase before. So yes, we are in a, let me label this. What was that? A 1 minute, right? 1 minute bearish fair value gap, so we don't forget what that is. All right. So we're in a 1 minute bearish fair value gap. So I'm looking for bearishness out of it. I just don't typically enter right away. I want to see price prove to me that it's rejecting it. Now, before I continue with that, understand that this fair value gap is 12 points wide. 12 points is not a lot at all on the NASDAQ. So 12 points, don't get me wrong, I could have technically just entered and just had my stop slightly above it and been okay. Even if it was a 15-point stop, I'd have been all right? But I'm just telling you how I tend to do things. I tend to just, I'm a pretty defensive trader. Even though I know so much about offense, I actually am more so a defensive trader than anything. So I'm gonna go with confirmation. So that's how I would approach this. Let's see if we get confirmation. No confirmation, right? We didn't come back under this bullish fair value gap. We didn't come under the bullish one. So I never entered a trade right now. Let's see if I could get a rejection. Okay. Nothing so far. I mean, boom, invalidate. We're invalidating it, right? Oh, did we get a 1 minute closure? Oh yeah, we out of it. So for me, I would have never even entered bearishness. Like I would have never even entered a bearish play in that scenario. And that is an example of why I'm a defensive trader, because I'm not saying 12 to 15 points is a lot. Like, of course, it will be a small loss, but it's just avoidable for me. I just feel like if we were going to use this area, my fault. I just feel like, I'm cool with getting in a little bit later, but with more guarantee. There's no way that we're going to invalidate this bullish fair value gap, yet still end up bullish. That's just very unlikely. So I have if-then statements on this now. I have if then statements on this. So if we invalidate this, then target yellow. You feel what I'm saying? If we invalidate this, then target yellow. We never even touched it in the first place, so it became irrelevant. I never took a trade, so I'm cash. And that's how I be approaching things. I'm like, I bet we bullish, but now don't forget the initial if then statement we had, y'all. If we are not like if we are bullish, then we will invalidate this. Okay, so we invalidate this, so you know we're bullish. So now that you know we're bullish, you can look for bullish entries. So what's something that price might use if we're bullish right now? I'm sure a lot of you are looking at the screen and saying, oh, there's a bullish fair value gap. I agree with you. Congratulations, you're correct. If we're bullish, we probably will use that. So I'm not even saying that you have to wait for price to come into it. For me, I tend to look at like the points, and if a risk to reward makes sense, I'll take it. So basically, my stop loss right here is gonna be around 104. Even if you move it down a little bit and say 102, price is at 119. That's a 17-point stop if I enter right now. So 17 points is not a lot on the NASDAQ. Now understand that I'm in 3 mini contracts. So people who are not familiar with futures, 3 mini contracts is a lot of money. So don't think that you have to lose $1,000 behind this trade. I know some of y'all are new to futures. So what I would say is a lot of people take micros, right? So micros is for like most people's account. Most people have the account size that's suitable for something called micros. Micros pay you a lot less than minis do. So to put it in micros, you would lose, I think, $102 here. You know, $102. That's what you would actually lose if this was a micro. So this is really you're risking $100. That's not a lot of money for your account. I know everybody's different, but for a lot of accounts, 100 is not a lot. But you can make, let's say, if we make it to the highs, just to put it in perspective. Let's say we make it to these highs, you're risking 100, but you can make 520. It's a good risk to reward. You know what I'm saying? So, anyways. So here we are. Stop loss will be based on that. If price doesn't even come back to it, even better, right? Even better. Now, what is price using on its way up? Do you notice that we're trading past these bearish fair value guys, but price is using what? Bullish ones. It's using bullish ones on the way up. Interesting. Yeah, because bullish things tend to be respected when we're bullish. That's all it is. And we already been talked about this because we already got a plan from a higher time frame. On a higher time frame, we already talked about how if price comes to this purple area, that's a very bullish sign that we're gonna make a move, much higher, probably to take out these highs up top, and even higher. Who knows? And so the fact that we're in this quote unquote bearish fair value gap is an extremely bullish sign for us. I might even go to the 5-minute and see if we have a 5-minute fair value gap, but we don't have one yet. Okay, cool. We still in the middle of that. So I'll go back to the 1 minute for now. So here we are, prices, kind of dancing. It's getting a little turbulence, of course, but we don't really believe in that purple area at this moment. Getting a little turbulence, right? It's causing a little turbulence, but you see price now moves higher. Cool. Do we have a 5-minute? Yeah, I think we should have a 5-minute fair value, man. Let's see. Come on, trading view. All right, we have a small one here on the 5-minute, slightly above where our average course is at. We're also like extremely bullish as you can see. At this point, these highs look so ridiculously clear to me. I can't even explain it. They look so clear. You see price making a move to the upside. What do we leave down here so far? We left a nice 5-minute bullish fair value gap. I would want to see that respected if we did retrace into it. Oh well, there you go. Target gets smashed, and of course you're holding for what you have more equal highs up here. Something we tend to target. I actually talked about it in my free course. If you have not gotten my free course and you're watching this on YouTube, click the link in the description. I got a free course. I have a whole liquidity class in there just to put you on what liquidity is. We look at places that have relatively equal highs, like this cluster of candles. That's like candy to these market makers. So that's something I would definitely look for price to target in the short term. Is go for that general area right there. If we're gonna get there, I ideally would want to see this fair value gap respected, right? I would want to see this one respected right here. So even as far as like trailing, my fault, I should have been trailing it for y'all, my bad. Even as far as trailing the play at this point, I might trail right here just because I do want this yellow line on top. I do want this yellow line on top, but I'm trailing because I need to give price room to tap into this to take us there. You feel what I'm saying? So notice I'm getting direction first, I'm getting targets first, and then I'm getting my respectable area second, my PD array second, in other words. But I get my targets first, so I know where we want to go. And now I'm trailing my stop based on, okay, we need to respect this area to see that. You know what I mean? So here we are, we getting closer. Price retraces, doesn't even actually touch the purple. If you look closely, we never even touched the purple. Even better. And then target gets hit right there. And then at this point, with that target hit, I'll probably, knowing myself, I would probably be trailing based on this 1 minute, because I understand if we're still bullish right now in the short term, it's very likely we're going to respect the upper half of this 1 minute bullish fair value gap. If we are bullish in the short term, that will be my expectation. So I'll be watching the upper half, but I'll give it room for the entire area. So let's see. Let's see what happens here. We're still respecting it. Okay, it's giving us turbulence. We come back into it. Okay, cool. I probably would trim here in real life. I probably would trim here. We're being biased, so I'll take off one. I might even take off two and just leave a runner for the entirety of the fair value gap. And let's see. So buyers are respecting, slightly traded under the upper half, but then boom, we get stopped out and profit. Cool. And so let's see what happens. This is 5 a.m. or whatever. That would definitely be my trade. I'll be good. I'll be like, you know what? I don't like it. Because that got invalidated, I understand there's a chance we could have a deeper retracement. There's a chance of that because that got invalidated. I don't want to be a part of that. I'm chilling. And so that's how I would treat this situation. But either way, look how you're getting this entire reversal really from noticing things all the way down here. Knowing when you're wrong early. So let me say this real quick. I'm not mad at anybody in the world for, at this moment when this red candle formed, targeting 23,035, that yellow line down there. This is a great target right here. This looks amazing to me. I love it, actually. I would definitely be bearish at that moment as well. But it's important to know when you're wrong. It's important how to recognize those signs. So obviously what I do here in these classes typically, especially, is I try to tell you guys as much as I could. I try to also give you an overview or an idea of how I approach things. But there's a lot of gaps to be filled in that I could never possibly teach you in the matter of an hour or two. There's just no way. They're built out over the course of the mentorship, of course, because it's literally layered. Everything builds on top of each other. So of course you would need to know why I say the statements I said. Like, if you guys remember, I said I don't like the fair value gap up here. This was not like a fair value gap for us. We didn't like that one, for example. But you may ask yourself why not, you know? And then you might not know why I didn't like the other 5-minute one right here as well. Like, you know, so there's missing pieces, but that's a very layered topic. But at least you can at least see the approach as to why I say what I say. When you do fully conceptualize what I'm getting at, then it's really helpful to recognize these reversals early so you don't get caught holding a bag. Like, if you were in shorts and you were playing this move, I'm telling you right now, bro, once we invalidated this red fair value gap right here, once we invalidated that, bro, you probably want to get out. Especially how we invalidated it with making a bullish fair value gap, right? We made a bullish one when we invalidated it. So we didn't even invalidate it in a staggered manner, which might give you a little like suspect vibes, like, dang, why are we chopping to the upside? I know it moved past where I wanted to, but maybe price is gonna come back down. Like, nah, bro. This is a strong reversal, y'all. Strong reversal. So if we move in aggressively past your if-then statement, stop. This is what we call a signature, right? Stop fighting your signatures And so that's the beauty of understanding trend in a deeper manner. Like you understand trend, you start knowing like what areas are the most important in the market. So you wouldn't even wait on this fair value gap to get invalidated. You know that the one on the bottom is the most important in this specific context. The reason I say in this specific context, people, is because there's a lot of nuance to fair value gaps. In this case, we are looking at the bottom one, right? In this case. In another case, guess what? I'll be looking at the top one. It's really like that. And so it literally depends on the scenario. And that is why if you guys see the chart debates that I put into the free Discord, I give the chart debate to the free members, I give the chart debate to my mentees. The mentees get these right consistently over and over and over in abundance because I teach them how to handle the different nuances in the market, the different scenarios. You feel what I'm saying? They know when to look for the bottom one versus when to look for the top one. Like there's no concrete rule. So that's what frustrates me about learning on YouTube and things that people tend to do, or whoever else is teaching fair value gaps a lot, because high majority of people don't understand the nuances to these things. They don't understand why these fair value gaps are trash. This is trash, that's trash. These up top are trash. Like this one up top. These are all dirty, trash, horrible bearish fair value gaps. Terrible. We would never look to short these if you understand certain concepts. The only one that mattered was the one on the bottom. So when that got invalidated, abandon shit, bro. We bullish. We bullish. You know what I'm saying? So question in the chat says, do you wait for the body to close for it to be an invalidation? Or is it invalidated as soon as it breaks above? Great question. So bodies. We want to see bodies close above it. So like in this case, when do we get a body on top of it? You technically got a body on top of it right here. So you could wait for this candle to close if you want to. Even in my demonstration, actually, I did wait for that because if you recall, I ended up getting in long with the stop loss based on the bullish one, right? So we got in long. Basically, we got in long right here. Our stop loss was based on the purple right there. So entry on top, the bottom green line was a stop loss. So yeah, we know it's okay to wait for it to fully get closed over before you consider it invalidated. Absolutely. And thanks in the chat, seeing y'all help out with that answer. So I appreciate y'all in the chat. Okay. So question is here. No problem. A question said, what investment would you have to make in order to make 6 or 7K on that trade? Like how much would it cost? That's a futures question. So futures is not, I know you're picturing it like options where, in options you have to put in a certain amount of money to make more back. Futures is a set price. Like 5 points equals this amount of money at all times. 5 points will always equal the same amount of money for everybody. Now, I would love to break that down for you. It just for time purposes, I won't go in depth about that right now, but I got the answer for you in my free course. Okay, my free course. So if you in my free Discord right now, go to the channel that says free beginners course and watch the futures classes there. It'll fully explain it to you. I break down all of that in the futures class, right? In that free course, all of it. So you'll know exactly how to calculate futures and know how much you would have to put in, or what account size, everything. It'll break everything down. No problem. So yeah. All right, cool. So that's that. Now, obviously, you guys know about Friday. Friday was a crazy day. We all saw the market go absolutely ballistic. And so let's see. Let me actually move to a different time frame so we can move a little faster. Because we ended up, chopping ahead and we start to move higher finally. So it did break these highs. That's good. That's 6:05. Let's go to the 15-minute. Let's go to the 15-minute. Let's move it a little faster. Try to get over to the 9:30 session. Jerome Powell ends up taking the podium at 10. My guy shook the whole world up. So you have some consolidation heading into my boy Jerome Powell. Have some consolidation heading into it. This last 15-minute candle is 9:15 a.m. All right, so something that, my fault. I wanted to speak to this before let's go to the hourly real quick. Hold on. Let me show you the hourly real quick because this is extremely, extremely, extremely important. Like ridiculously important. I cannot forget this. Anytime we trade, my people, anytime we trade, we are always framing every single trade from a higher time frame, literally at all times. So right now, if I were to look at the hourly, or if my mentees were to look at the hourly as well, we are currently building if then statements on this hourly bullish fair value gap right here, right? That's the only building if then statements on, because if this does not work, I know we're going to the yellow line below. If it does work, I know we're going to the yellow line above. Everything is based on this hourly bullish fair value gap, everything. Now, if you look inside of it, we already had a 5-minute one. So I'm gonna leave the 5-minute one on there just because it's very likely that it will go to where they overlap each other if we were gonna tap into it. But I'm just making it clear that understand that this hourly bullish fair value gap is extremely, extremely important. Why do I say that? Because look at how we like this is actually beautiful to me. I ain't gonna lie, like I'm trying to chill. I'm getting excited. You know what I mean? Like I always say, price action, women, price action, women is like hand in hand. You know what I mean? Like it's like hand in hand for me. I don't know. Sometimes I don't know which one I like more. Sometimes, man. I ain't gonna lie, man. Yo, this is a beautiful visual to me. I'm gonna tell y'all why. I'm gonna tell y'all why. My fault. Let me bring it back to business. My fault, y'all. So on the real, like we engineered liquidity right here, good people. This is an engineering of liquidity, and we also engineered liquidity right here. Understand? The roller eyes emoji is crazy. And I appreciate you, Lady Cuss, for helping out with that futures question. By the way, I just think that. So look, we engineered liquidity on the top and on the bottom, and so to me, it's like we're in the middle of chop, absolutely in the middle of chop. And we have a beautiful pool of liquidity on the upside and a beautiful pool of liquidity on the downside. And there's a fair value gap right in the middle that we can make a decision on. This is gorgeous. Like, bruh, this is the most gorgeous if-then statement I've ever seen in my life. It's like, it's either that's going to happen or that's going to happen. And there is no in between. Like, no in between. That's it. Now, how aggressively will we move past either one of those targets is a little more difficult to say. I would say this. There was a strong chance, as I actually put in my channel, by the way, and this is something I was wrong about, by the way. I mean, yeah, you can say I was wrong about it. That's fine. Like I said, if we come above these highs, I would expect to see it sweep those highs and come down lower. The reason I said that is based on the daily chart. The daily chart pointed to more downside. So for me, I wanted to see us sweep these highs, not plummet past those highs as hard as we did. All right, y'all seen that candle on Friday. It was crazy, but it's okay. We are looking at these highs getting ran, but how aggressively it gets ran is a little more debatable. Now, if we would have come through these lows, though, I ain't gonna lie. If we came through these lows, we were gonna see 775. Easy, 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 easy. But regardless, nonetheless, my people, nonetheless, beautiful setup for you. So with that being said, let's head into the New York session starting at 9:30. When options people wake up and start trying to trade, because futures people have been on the chart probably. And here we go. This is 9:20, 25, 9:30. All right, so what's the first thing price does at 9:30? Like this is the 9:30 candle, my people. What's the first thing these market makers do? They tap into that inefficiency. So if we have a bullish target, a bullish draw is what we call it, a bullish target, right? It's very likely, or let's say it like this: if we have a bullish objective, it's very likely that at open we're gonna bait people in the opposite direction first before moving higher. Okay, so here's what's tough about what I just said. Here's what's tough about what I just said before I even elaborate for real. I told y'all there's a strong chance on both of these targets getting hit. So entering buys right here, I would say is a bit risky just because it goes a little bit like basically because the higher time frame is not as clear as it could be in another setup. But on some hindsight stuff, I always tell y'all when it's hindsight because I predict the market so freaking often for y'all that I'll always tell you guys when something's in hindsight versus, you know what I mean, something that I would have known beforehand. So this is a hindsight statement. In hindsight, seeing that we were indeed bullish at that moment, this is the best point of interest of all time. Like this is such a golden opportunity for longs. Um, I played upside here, don't get me wrong. I did not enter inside of the purple, but I played more so the continuation to the upside. I did play that a little bit, but I didn't get in inside of the purple because I told you guys, man, like we could have easily went down to the yellow line. Like it was very 50-50. Notice that we're smack in the middle of a range that we've been in for 2 days. Like we're literally at the halfway mark of a range that we've been in for 2 days straight. So it's very 50-50. But if you have a different scenario, a different setup, a different, not even a different ticket, just a different setup, right? And you know where we're going, like it's very obvious to you that we're going to the yellow. Look for the opening price action to manipulate people, okay? To manipulate people. It wasn't technically a OB, but I know what you're getting at, Pat. It wasn't technically a OB on that hour. But this is a hour fair value gap, though. It is an hourly busy. But I wouldn't call it an OB personally. But I know what you're getting at. You're looking at the 2 reds and all of that, so that's straight. Now, yeah, it's an hourly busy, simultaneously a 15-minute busy, simultaneously a 5-minute busy, all at the same time. So being that the objective was to move higher that day, this was your trade opportunity. The fake move to the downside. Let's just see. Once again, on some hindsight-ish, kind of. I mean, I did play upside. I didn't get it in purple, but I did play upside. Let's see on some hindsight-ish, you know, how you could have gone long. Like for me, let me show you real quick what I'm looking at personally. Here, I already got bullish once price started trading higher into this fair value gap, meaning like you see this fair value gap right here. If we're gonna use that, we gotta use the lower half. Like, and I mean super lower half, because like I don't even mean like this. I know this is like hard to, visualize, but I'm just saying I don't even want to come in that. It needs to literally be like this in this scenario. So my point is, once we started like trading deeper into this purple area, I'm already getting bullish. Now I'm just looking for bullish setups for real. But you can see we're really just consolidating. There's nothing really going on. But I'm just saying that's when I got bullish. I did not take buys in here. I wish I did, but no, that's some hindsight stuff. I did not take buys in there. I wish I did though. That would have been fire. Either way, price has to move to the upside. I'm in this upside move. I eventually take profit once price invalidates. Which fair value gap was it? You ain't here. I don't remember where I took profit. I took profit sometime in this area. Maybe I use a lower time frame to get it, but I don't want to go through that because I'm actually trying to talk about the massive candle. So, and I know I'm running out of time, so I'm just trying to finish this real quick. So look, we tapped into the area, we pushing higher. We have consolidation. Something that price tends to do a lot in consolidation is it tends to quote unquote retest the consolidation. So that's what you see price eventually do before we get that massive candle when Jerome Powell speaks. Now, I'll say something real quick, and even I don't know if Tiff is in here, but even Tiff said it in the chat. She one of my mentees. She was like, she was actually playing downside during this move, but based on our signature, she got out right in time before this candle came out. That candle. Yeah, she got out right in time. And the reason why she got out is because of the signatures that we had in the mentorship, which will let you know that price should not be coming back into, like she's saying she had a stop set. Price should not be disrespecting this red high right here. So that's something that got her out of the trade. It shouldn't disrespect this red high. So even if you play downside for this retracement, that's cool. You have to understand what areas should be respected if we're truly still bearish. So you're making money, please move your stops. Don't move your stops based on money. Like I said earlier, move your stops based on what areas should be respected. That's when you move stops into profit. So she made money, even though this candle was massive. She got out of her puts just in time, or not puts because she's in futures. She got out of her sells just in time because she moved stops down to right here. And I think that's a great exit. I agree with her. And once again, it has to do with the expectation of delivery. Notice she's not looking for price to come back. Shout out Tiff if she in here, but she's not looking for price to come back to this fair value gap because that's a bad retracement if we're actually looking to take out this pool of liquidity. Of course, it's a layered topic, but I still want you to get the overview of know what areas should be respected. Now, this freaking rally is OD crazy. It's wild. Obviously, price came back, retested the consolidation before making that move. I was trying to start my live trade at 10 a.m. this day. I told the gang we're gonna trade at 10 when Jerome Powell comes out. Did I know that the 10 o'clock candle would look like this? No, I did not. So, I'm getting a Zoom together and stuff. This is happening as I'm freaking pressing the Zoom button on my computer. I'm like, dang, the move happened because I was bullish, as I told the team. Like, I was looking for price to run out Wednesday's highs. It happened in 1 minute. Like, I don't know if y'all realize this. This is a 200-point candle in 1 minute, bro. About 60 of those points happen in 15 seconds to be exact. 60 points in 15 seconds, no exaggeration. 200-point candle. So it's just, hey, what you want me to do? And that's a fact. Like what Michael said in the chat, he said that's how you know the market is rigged, because that candle happened before Jerome Powell even spoke. He didn't even say anything yet. That was the first candle. And then, I'm not even, I didn't feel a way watching this personally for a couple of reasons. I want to quickly speak to this. I can't even lie, because this low-key annoys me in the trading industry. Not industry, I guess just out of traders altogether. Like, we gotta stop being like, yo, I could have, man, yo, if I would have, stop doing that on stuff that don't match your trade plan. If you're familiar with Jerome Powell, anytime he takes the podium, that there's always like a flash candle when he takes the podium. So for you to be like, yo, I should have been in longs, at 10 on the dot when he take the podium, that's stupid. Because why would you gamble on a news candle like that? I play news events all the time, but there's certain news candles I don't gamble on. I don't gamble on Jerome Powell news candles. I don't gamble on CPI news candles, and I don't gamble on unemployment news candles. You know what I mean? I'll play, not gamble. I will play a PMI candle, ISM, those very smaller economic news events, but there's certain types of candles that the market is subject to manipulation on, to where I'm not necessarily trying to even apply my price action knowledge on it. Or even if I know where it's going to go, I'm still not going to play the move, because sometimes it'll flash down first before going up. This flash down to be 100 points before it runs 300 in the other direction. Like, that be happening too. And it happens in a split second where you can't even place a stop, and your broker won't respect your stop because it moves too fast. And so I'm tired of people saying stuff that, like, stop doing that to yourself. Like, you beating yourself up like, yo, I should have gambled on that. All right, go ahead, do that. Yo, the next 10 times that you have a flash candle for the news event, try it out and see how it works out for your account. So yes, there's people that's gonna hit the chat saying, yo, I caught that. Yo, yes, all right. Good. They gambled, they won. You could go to Las Vegas right now and you go and gamble, you could win. You could gamble on anything and win sometimes, but I'm talking about what is repeatable. I like to take good wins, not bad wins. What is repeatable? So of course I wanted 200 points. Don't get me wrong, that would be fire. Of course, anybody would. I'm just saying, like, imagine that it would have gone the other way. Or imagine they would have had a flash candle to the downside first before running to the upside. And so that's what I'm trying to say. Like, it's okay. This is the best move on Friday. This is the best move of the day on Friday. We had 200 points here. After that, it ran a little bit more, but it was staggered. Like, it ran higher, but it was like this, and then it stayed sideways for the rest of the day for real. So we did, catch a move to the upside on a live trade. Don't get me wrong. We did play a little bit of that upside move. But like, we played basically the continuation a little bit. We played this upside move right here, and then we played to the downside right here. We actually sniped the downside for real. We got it literally like right here and played this downside, trimmed, and then took the rest of our stops and profit about right there. So, and then that was it, bro. That was it. The rest of the day literally went sideways. Like that is the entire day for you. Like the whole day was, if you managed to catch this first upside, that second downside, or this flash candle. To me, those are the only like real moves on Friday. But I know that when you zoom out, and if you were at work, you might be at work and look at the market and be like, yo, oh my gosh, like price went crazy today. And like, yo, people probably made a huge bag. And it's like, yeah, if they gambled, they made a bag. Like, that's not really nothing to like FOMO on, nothing to beat yourself up on either. It was a flash candle, everybody. And after that flash candle, the market went sideways for the rest of the day. Don't put that in your trade plan. Don't be like, next time Jerome Powell speaks, make sure that you take a play on the first candle that he speaks on. That's a stupid thing to put in your journal. Like that's stupid. What I'm missing the chat. Exactly. You could have gone either way. Luckily, I was swinging SPY at the time and caught the move. That's what's up. Yeah, like if you in swings, I think that's a little different than like day trading for surely. Mike said can't plan for that, so it could all, just be a gamble exactly. And yeah, definitely. Nah, I appreciate y'all. Appreciate y'all in the chat. Word. So, those are overall the things I wanted to show y'all as far as price action setups from like last week. But just as a quick side note, you guys do see that it ended up using that fit value gap to run out those highs like super aggressively. You can see this whole cluster of candles got traded through. Price ends up getting turbulence where at this bearish fair value gap, that's where we got turbulence at. We're actually still dealing with that. Now, is this a good bearish fair value gap? No. No, I don't like this for shorts. Like I wouldn't use this to take puts on or to take sells out of. Like, no, it's not a good one in context. It could just cause turbulence, but it's actually more likely that we move past it. But I'm gonna speak a little bit later on my expectations on the Nasdaq. So let's head to the chart debate next, right quick, and let's really talk. Got some stuff to say. And once again, I appreciate y'all in the chat. Thank you guys for real. I'm glad y'all getting value from it. So let's get into the chart debate, man. The infamous chart debate. Where we at? All right, free community side. What we got? I love when I pick chart debates and I see real mixed answers. That's when I'm like, okay, I stumped the group. So this is the chart debate from this weekend here. You can see that this is the picture. If you're watching this on YouTube, you might want to pause it and choose an answer because I'm about to reveal it in a little bit. Free community, what they picked for this? They said that line 2 is probably going to get hit first. 38 people said line 2, but 31 people did say line 1. So it's a mixed group on the free side. Let's see what the mentees is talking about for real. Like, you know what I mean? Let's see what the good mentees, what they talking about, man. Hey. Mentees, don't embarrass me, man. I don't know if y'all right or not. I don't know. We about to find out. Don't embarrass me. We got all 32. Well, all 32 answers is saying line 1. All 32 answers is saying line 1. I don't have one mentee who's saying line 2. So it's either y'all all right or y'all all wrong right now. So it's time for me to reveal it after this commercial break. So today I'm drinking Minute Maid zero sugar fruit punch. And you see, to me, I feel like life is like a cup of fruit punch. You know what I mean? It can be sweet, but sometimes it can be bad for your health. You know what I mean? So I feel like sometimes, life, there's good moments, but then there's also times when, it's throwing you bad moments. It's a mixed bucket. And so that's why I say it's like a fruit punch. Life is a big bowl of punch. It's a mixed bucket. And you take what you can with it, the good, the bad, the ugly. And it's good to cater to your mental health. Go see a therapist. You know what I mean? There's nothing wrong with that. Mental health matters. Love matters. Protect all women. You know what I mean? What else? you know, invest in black businesses. Word. So yeah, absolutely. Okay. So y'all want the answer though. Y'all want the answer. Y'all want the answer. My fault. I just, we always gotta do our commercial breaks. Sponsored by nobody still, but we working on getting them sponsors. Yeah, we working on getting the sponsors. I'm just okay. So yeah, literally just saying anything. Like you gotta I'll show you I want the answer, man. So let me get y'all that right quick. And it's looking like line one ski. Line one ski. So line one is the one that played out. Shout out to Good Mentees. Yeah, I got it right or whatever. Clearly I gotta go harder. But I ain't gonna front though. Mentees, the group that answered that, they did just graduate. They just graduated last week. So shout out to Mentees for making it through the mentorship. Y'all better be getting it right after everything I done taught y'all. The heck? I'm glad every freaking mentee got it right. That's a fact. Yeah, exactly. But line one, shout out to people who put line one, including the people in the free community who put line one. That is absolutely correct. So good stuff. Word. Good stuff. Now let's talk. Absolutely. Absolutely. Now let's talk economic calendar vibes, right? Headed into next week. We're gonna talk about what is expected in the market next. What's the predictions and futures, options, forex, crypto, everything. Let's talk predictions. I'm gonna try to breeze past this part. So what's the weather? The weather is it's not looking too hot. It's actually looking cloudy with a chance of rain here because it's nothing really to be happy about. It's nothing really to trade with this week. There's nothing important. We got Fed speakers, consumer confidence is nothing major, especially in August. Nothing scheduled here. GDP is not bad, but this is first revisions though on Thursday, and then Friday is PCE. PCE be decent. We could look at PCE. So I feel like if there's gonna be good price action, like trendy price action, it'll probably be towards the end of the week here, Thursday and Friday vibes. But other than that, yeah, ain't really nothing to talk about like that. Nothing major. And then it is the last week of August. August is just in general just not really a good month to trade, and we're now towards the end of August finally. So let's try to finish strong here. So let's go. Let's start predictions. I'm gonna start with forex before I move back to futures and everything. So let me get down to forex, man. Where is forex at? So let's start with the dollar. Let's start with the dollar, my good people. Let's start with the dollar here. So last week, well, just in general, recently, I've been telling y'all, yo, the dollar is just in a state of consolidation. Not a fan of the dollar's price action right now. I did tell you guys that I am bearish on the dollar until proven different. I told you anytime the dollar moves up, be prepared for it to come right back down. If it moves up, be prepared for it to come right back down. So even though it's choppy and it's nasty, when we get a day like we got on Friday where the dollar absolutely plummeted, like this is Friday's candle on the dollar, and I want you to notice something real quick. This is what I mean by the market always has an objective. Like if you don't see what I'm getting at now at this point, I don't know what you're looking at. When I talk about these staggered moves up and how we tend to take back those areas, do you see why I trade for liquidity now? Oh, and maybe you could also see that this is clearly not just a futures thing. Stop thinking that I teach futures. I don't teach futures. I teach price action. It applies to every market. This is something for Forex for real, DXY. And you see that it's doing the same thing we talk about on the NASDAQ chart. Whenever price moves like this, you have to be prepared for this is coming next because this staggered move is a setup. They're baiting you to think that this is a nice quote unquote trend line. I don't like trend lines. Let me be respectful to trend line traders in here. Let me not even do it. Just they get taken out of the straight line. So be prepared for that at any given time. But here we are on the dollar. You see a method objective, and ever since the method objective, now we get in a retracement. Exactly. So one thing I'm gonna watch on the dollar right now is how we treat really the lowest parts of this big bearish candle. I don't really want to trade in deeply into this candle, but the only thing is, I told you that we are in a state of consolidation, so I would not be surprised to see us trading it in. But the higher we go into this red candle, the worse it is. In this context, we really want price to actually stay pretty aggressive and continue dropping into these lows down here, those lows down there. So I want dollar to move here, but it needs to be aggressive. It needs to start trading back to the downside. Overall, I'm bearish on it. Let's move on to the dollar pairs. So let's go Euro USD. Euro USD. So we got bullish fair value gap right here that is used twice. We really haven't gone anywhere. Of course, it's a dollar pair, so if the dollar is consolidating, so will euro. I told you guys I am bullish on euro until proven differently. Anytime euro drops, it's gonna get bought right back up. I keep telling y'all that because it has a monthly objective that it has to get to all the way up here. It's moving towards that. That's why I say anything to the downside is probably gonna get bought up. Just like I said about QQQ and SPY right now, I gave you guys the all-time high targets that we're gonna move to next. So anytime you see market pullbacks like we got recently, understand that it's gonna get bought right back up until at least that objective is hit. So we're on a bullish objective on a monthly time frame on the euro, British pound, the Nasdaq, the S&P. We have bullish objectives on a monthly time frame that will get hit. So just know any dip is likely to get bought. I wouldn't fall in love with puts. I wouldn't fall in love with puts on anything right now. So here we go. You see the daily bullish fair value gap right here that we also use twice on British pound. Same thing. Just these dips is getting bought. Overall, I don't really like this area. I do feel like it wants to move through these equal highs. I'm gonna circle them. But because the dollar is in a state of consolidation and it's the last week of August, I just kind of feel like we're gonna play around in this area before we ever take those highs. I don't know. It's a bit speculative. I just have low expectations on price delivery right now, but I am overall bullish. I remain bullish. New Zealand dollar, I told you we've been consolidating on this bullish fair value gap on the daily for some time, mixed in with this bearish monthly fair value gap. We've been stuck between these two valid PD arrays for forever. We finally moved past the bullish one on Friday, right? Now, does that mean to me that we're bearish? No, I wouldn't say so, especially based on what we ended up doing. My fault, we moved past it on Wednesday. I wouldn't say that we're bearish based on what we did on Friday. Friday would be a bad sign to me. Is there a chance that we can reject? Absolutely, but I don't like the retracement we had on Friday. It's not a good sign for continuation. So there's definitely a strong chance that we could be using this fair value gap instead right here to take us higher. Because I'm not a fan of that bearish delivery, but we'll see. Either way, I told you I would stay out of this price action because y'all know I don't like to trade in the inside of chop, right? Don't like it. So I still, being that we're coming right back into the chop, I'm not a fan of trading this still. All right, so that's that. We almost done with Forex. We got USD CAD right here. Same thing. Anything to the upside will probably get sold right back off. You can see here, I remember I was telling y'all, I think that I was anticipating a potential AMD setup right here, but it clearly did not play out. We ended up moving higher again. And so now we get a move back to the downside, and just in general, like I said, just back and forth movement here on these dollar pairs. It's just August price action for you. And so that is USD CAD. I also don't think this is tradable. I really feel like just in general on Forex, I want to see a proven trend on the dollar for me to really be excited to talk about Forex again. Right now, we've been just going sideways for the most part for a little bit of time now. Ain't nothing really to talk about. Look at this other dollar pair. This is the daily chart, my people. You see what I mean? Daily chart is nothing to talk about. And to talk about. We rejected this monthly SIPI. Yeah, that's cool, but nothing really to talk about. Move on to crypto. All right, crypto. Let's talk about it, man. I told y'all on the weekly chart, this weekly bullish fair value right here on Bitcoin is extremely important for Bitcoin. I don't want to see Bitcoin invalidate this. Extremely important. Now, if it invalidates it, am I a bearish person? No, I wouldn't be a bearish person. I wouldn't be bearish, but would I say I'm bullish? I wouldn't say I'm bullish either. Wouldn't say I'm bullish either. So yeah, there's a state of neutrality. So right now I am bullish. To be very clear, I am bullish because I believe the weekly bodies will respect this purple area. I'm gonna say that again. I'm bullish because I believe weekly candle bodies will respect this weekly bullish fair value gap and take us finally to our first target on Bitcoin. Well, it's not our first target. We've smashed all our other targets, but more recently, I gave two more targets on Bitcoin. 126,817. We came so close the other day. We came to 124.5. Just 2,000 points, $2,000 away, or whatever. As long as we respect this, I still like us heading to that level. And then, of course, I have the second target at 144,278. So Bitcoin, I do think is gonna respect. I think weekly bodies will respect this purple area, and then we'll head to those targets. If it doesn't respect it, I wouldn't say I'm bearish just yet. I wouldn't say I'm bearish just yet. I'll let y'all know when I'm officially like a bear on Bitcoin for real. Ethereum did what we wanted it to. Literally, I've been talking about Ethereum since price was down here. I talked about price needing to respect this daily fair value gap to remain bullish on Ethereum. What did it do? It respected it beautifully. I talked about price respecting this weekly one to remain bullish. What did it do? It respected it beautifully. And then more recently, I don't know if I talked about this one in class, maybe within my peers. So I won't even, I don't know if I told you guys this on class. So I'm not gonna make that claim. But to my peers, I gave them two options because I have a group chat. My friends asked me about my crypto projections because they invest in crypto. So I know I told them this BISI or this BISI. All right. It's either one of those will work. I'm trying to highlight this, my bad. Either one of those will work. Obviously, you use the one on top, even better. Beautiful mentees. You can see the emoji that I put on the BISI, giving you a hint at what transpired there. So maybe you want to check that out for yourself, mentees. Y'all know what that emoji means. So that's the type of fair value gap that we used in order to see all-time highs. And now next for Ethereum, just in general, I want to see us respect this daily bullish fair value gap right now in the short term, in order to move higher. Ideally, the upper half. If we were to disrespect it, am I an Ethereum bearish person? No, I'm not. I'm not bearish on Ethereum. To be honest, I feel like if we disrespect this, we probably might go sideways for a while before this next pop. Like I'm still bullish on crypto very much so. And last thing I'll talk about crypto is XRP. Same thing I told y'all before, man. Like just like I said with this weekly fair value gap, I said it with this one. As long as XRP respects this, we bullish. What do we watch? Massive runs to all-time high. Same thing. I like XRP respecting this bullish fair value gap on the weekly. As long as we respect this, I don't care how long we consolidate. I like it for higher prices. And I already gave the bullish targets on XRP as well. I like these targets up here: 4.29408 and 5.118816. You know what I'm saying? So that's that. All right, cool. So let's move on to futures here. Let's move on to futures. So, okay, now futures, man. Let's look at the weekly chart for a second and understand this. This is August right here, right? August has not done anything. These last four candles are pretty representative of August. We haven't gone anywhere. That's August for you. August does not do anything. Typically, every year is trash. So, this is why I don't like trading consolidation, or trading in August in general, because typically the most likely thing, the most likely thing to happen is for us to run out this yellow line, which is what I told y'all that I was looking for price to do. That's what I wanted price to do. But I already showed you in the demonstrations how we knew that was not going to happen real early on Friday. Remember, we talked about how to get out right here, right in that little section. So we know that, okay, never mind, abandon ship on that expectation based on what happened down there. So don't get me wrong, even if price don't go all the way where you want, you know the point of exit. So that's what I love about what we do. Now, regardless, what's my next expectations? Am I a bullish person? Because we not running to the yellow in the short term, do I think that we're gonna run all-time highs and even higher in the short term? I have a theory right now that we're gonna move sideways this week. We will see. But I kind of have a feeling that NASDAQ is going to kind of remain in this general range this whole week, maybe even into September a little bit, before it makes its next impulsive move either to the downside or an impulsive move to the upside. But I just have a feeling we're going to stay between these lows right here and these all-time highs based on what happened on Friday. Ursula said even with NVIDIA's earnings, I didn't even know NVIDIA had earnings. So to me, that depends on where NASDAQ sits before NVIDIA has earnings. So like, for example, let's say NASDAQ was sitting, smack in the middle before NVIDIA's earnings. It can make a impulsive move down here and tease these lows and still trade back up. Or if it's sitting at the top, it could even come up here and then trade to the downside. Like I'm just trying to say, like basically you can make aggressive moves within this range because let's understand that this range spans from um 22,775 to 24,068. So this is um almost 1,400 points, right? This is 1,300, almost 1,400. This is a lot of points, right? It's like 1,300 points for real. So there's a lot of room for Nasdaq to move within the high and the low right now. You know what I mean? So I do feel like we're gonna, probably be in a state of chop this week. That's why I'm not a fan of this week right now. That it's the last week of August and everything. I'm not really feeling it. So here's another reason why I say that. So you guys see where Nasdaq sits at, right? Look at where all-time highs are. This is the 4-hour time frame. Let's look at the S&P on the. You see what I mean? Whole different vibe. Whole different vibe. S&P is right next to all-time highs. So you guys might know what I'm getting at. Potential SMT divergence is about to happen. I feel like the S&P in the short term, maybe tonight, maybe Monday. In the short term, I think the S&P is going to run all-time highs. I just don't think it's going to have much continuation. I think it's going to trade back to the downside, coming back into this bullish imbalance right here. And it might have some type of consolidation in this general vicinity heading into September. That's really what I think is going to happen the most this week. But once again, S&P is real close to all-time highs, but the Nasdaq is very far away from it. So that's why I feel like, Nasdaq probably might move higher a little bit while S&P runs all-time highs. But I don't feel like either one of them will have much continuation. I feel like they're both going to end up coming back down into this bullish imbalance right there. So yeah, that's my expectation. We'll see, but I guess in the short term, yeah, I could say ES should be running all-time highs. Now, I think as far as my NQ1 chart, and I say NQ1 because actually, never mind. But either way, right now, I prefer to give these projections on QQQ because QQQ doesn't change like how futures charts be changing. My future traders know what I'm talking about. Every 3 months, there's a contract change, so it changes the numbers on the right side of the screen. So I don't like giving these targets on futures charts these days, but I do. When I say I think every dip will get bought until we get to this line, I do feel like that. Anytime we dip in the market, I feel like it's gonna get bought until we at least come here on the futures chart. But I'll show you that on QQQ instead. I've already given that target on QQQ, but it's cool. I'll show y'all again. Now, the Dow Jones, I told y'all the golden spot for the Dow Jones running the all-time highs was this fair value gap. I told you guys that many weeks ago. I said if we come in here, this is the fair value gap that should take us to all-time highs. Y'all seen the Dow Jones deliver that. Everything looked good on the Dow headed into these all-time highs. I do expect that very soon. We made a huge green candle right here. Of course, I want to see a bullish fair value gap come out of that. And then if we make one, I would like to see it respected. And I would like to see the Dow run all-time highs in the short term. All right, that looks good. So what I will watch for right now, I mean, you have a 4-hour bullish fair value gap right here, right, that we just created. I don't really want to see price come to the one below it. I don't want to see this one. I would prefer for price to use the one on top. I would like to see price come to, I would think price would come to the lower half of this bullish fair value gap. So I can see the Dow making a move like this, basically. So in general, I'll still watch the upper half, don't get me wrong. But I kind of expected to come to the lower half right now. I think the Dow is primed for a move to all-time highs. Nonetheless, obviously it's more of a continuation based on our official play. Our real play, if you've been here for a while, our real play was this to all-time highs. So if you in that move, I would say just continue holding because all-time highs look amazing right now. All right, so that's Dow, and then we almost done. Russell did exactly what we wanted to. Last week, right here in class, we said bodies will respect the upper half of this BISI to take us to this yellow line. I still like the Russell running to the next target up here as well. For that, literally the same thing I said on the Dow Jones. Literally, like 4-hour has this bullish fair value gap. I want it to be respected. In this case, I wanted to respect the 50% respected 50% of this 4-hour bullish fair value, and then I would like to see it run even higher. I'm just pursuing the journey of that yellow line above, but don't get me wrong, I don't think it's gonna be a straight line move. Like, no, I think it's gonna be just as turbulent as NASDAQ and ES may be, but I just think that that's the next destination. So just, once again, be careful. The move kind of already happened there. Now we're just hoping that it continues to trend, but I'm still bullish on the Russell. On CL, which is oil, we had called this move to the downside from up top. If you guys remember, we called bearishness into the yellow line when price was in my green circle right there. And so once we got to the yellow, I said, look at how we got to the yellow, everybody. And when we looked at it, we said, wow, look how staggered it is. And I said, yes, exactly. Because it's so staggered, I do feel like we're going to get a sweep more than a continuation. And so as you guys see, so far, it looks like we are sweeping it because of exactly what I was talking about. It's the way that we took the lows. And so we'll see if price continues to drop here on CL. That yellow line had moved. It's supposed to be right there. My bad. Yeah, the yellow line is right here. So this is what the sweep looked like. So that's a better visual for the sweep. So we targeted this, and this is our sweep so far. Yeah, go back to the 4-hour. There we go. So it's looking good, and we'll see. I think I had talked about price coming back into this fair value gap, but it's a vague memory now because we talked about that a while ago. Last few tickers is gold. Nothing new to say about gold. I told y'all, as long as we exist inside of this, I don't care about gold. There will be intraday plays. I actually called out a play the other day for y'all. I said that gold is going to move to this fair value gap. It did. That was the bottom so far, but it doesn't mean I want to trade it. I'm good on trading that, so I advise you to stay away from gold if you don't like to trade inside of chop. Like, I don't like trading inside of chop. QQQ, nothing different than what I said about NASDAQ. I just want to just remind you guys the targets that I gave a while back. Like I said, any dip in the market should get bought until QQQ hits 610 or 679. I like 679 better. 610 could cause turbulence, but I like 679 better. All right. And same thing with SPY. Same thing with SPY. We got 678.95. We got 744.66. So obviously I'm talking about like daily type retracements for real. Like you might see some, like price can come here and have a nice daily pullback all the way down here. That's possible. I would just trust in discount fair value gaps. I would trust in discount fair value gaps into these targets, basically. So anytime SPY has nice dips, I would be looking to buy those things because I do feel that we are going to remain in a bull market to these targets. Once we get to these targets, there may be a much deeper market correction, but we'll watch for that. And yeah, I mean that's all I really shared. The only thing I'm trying to think if I want to share this last play. Nah. I'm gonna keep that with the mentees. I already get it. I'm gonna keep that with mentees. My fault. That's all. We only right there. So if you're watching this on YouTube, like the video, subscribe to the channel. Make sure you click the link in the description for my free community. We got live trading links in there. We got a free course in there, a whole free course to get you ready to be trading and trading profitably. That's all inside the description. My Instagram, everything, man. Tap in with me. And most importantly, everybody, please keep God first in your life. That's the most important thing I said all day. And with that being said, that is all she wrote.